rapid-fire montage of news clips and graphics. Hey Bitcoin fam, welcome back to the Bulletin. Get ready, because we've got a packed show today, starting with a massive debate shaking up the corporate world. Bitcoin versus stablecoins for employee payroll. Companies are wrestling with whether to pay their teams in the king of crypto or opt for the stability of dollar-pegged coins, and we're breaking down all the implications for businesses big and small. Then, buckle up as the crypto markets are showing some serious strength, with Ethereum outperforming Bitcoin and major exchanges like Gemini, founded by the Winklevoss twins, aiming for a staggering $3 billion valuation in their IPO. We've got the latest on market movements, trader insights, and what's driving these incredible gains. We're also diving deep into the explosive growth of crypto options, especially after the Bitcoin ETF greenlight. This isn't just about buying and selling crypto anymore. Sophisticated traders are flocking to options markets, and we'll explain how this is reshaping the entire derivatives landscape, with giants like BlackRock and Fidelity leading the charge. And finally, a feel-good story of quick thinking saving an elderly man from a devastating Bitcoin scam at Common Sense. We'll share how a vigilant bystander intervened to prevent a significant financial loss. Don't go anywhere. Hit that like, subscribe, and ring the bell so you don't miss a single update. The payroll revolution: Bitcoin versus stablecoins for your business. The corporate world is at a crossroads, facing a monumental decision that could redefine how businesses operate and compensate their employees. Should they embrace Bitcoin for payroll, or is the stability of stablecoins the smarter, safer bet? This isn't just a theoretical discussion. It's a strategic shift driven by increasing institutional demand for Bitcoin and the evolving financial landscape. For small and medium-sized enterprises, especially those in Europe, understanding these options is becoming critical for survival and growth. Bitcoin has ascended to become a cornerstone asset in many corporate financial strategies, with institutions increasingly allocating capital to it. This surge in demand naturally leads businesses to consider paying their workforce in Bitcoin, envisioning potential appreciation and inflation hedging. However, the elephant in the room is Bitcoin's notorious volatility. A sudden price drop could significantly impact an employee's take-home pay, leading to dissatisfaction, retention issues, and a general destabilization of salary expectations. While the allure of Bitcoin's potential upside is strong, its unpredictable price swings present a significant challenge for consistent payroll. In stark contrast, stablecoins offer a predictable alternative. Pegged to stable assets like the US dollar, they maintain their value, ensuring that salaries remain consistent and reliable, a crucial factor in today's unpredictable economic climate. Beyond stability, stablecoins boast superior transaction speeds and lower fees compared to traditional banking and even many Bitcoin transactions, making them exceptionally attractive for global payroll and cost-conscious startups. The growing adoption of stablecoins is also paving the way for innovative hybrid payroll models, blending fiat currency with stablecoins to offer employees the benefits of crypto exposure without compromising purchasing power. However, the path to crypto payroll is not without its obstacles. Navigating the complex and often murky regulatory environment is a significant hurdle. Businesses must contend with varying international laws, labor rights, and payroll management regulations. Tax compliance adds another layer of complexity, requiring meticulous tracking and reporting of income and payroll taxes. Furthermore, many labor laws mandate wages be paid in traditional currency, necessitating explicit employee consent before transitioning to crypto payments. To successfully implement crypto payroll, SMEs should seek expert guidance from legal and tax professionals, bolster their security infrastructure, and consider partnering with specialized third-party payroll services. These services can streamline compliance, tax reporting, and cross-border payments, easing the transition. Strategic approaches for SMEs include adopting hybrid payroll models, prioritizing stablecoins to mitigate volatility, consulting with financial and legal experts, implementing robust security measures like multi-factor authentication and cold storage, and leveraging specialized crypto payroll platforms. As the crypto ecosystem matures, the debate between Bitcoin and stablecoins for payroll will continue, with businesses that adapt and prioritize employee needs leading the charge into the future of compensation. Don't miss what's next as we break down the latest market surges and major exchange IPOs. And stick around as we explore the groundbreaking rise of crypto options trading, powered by Bitcoin ETFs. Crypto market surge. Ethereum leads Gemini IPO's $3 billion IPO. The cryptocurrency markets are painting a vibrant picture this Friday, with a palpable sense of optimism as many digital assets trade higher. Leading the charge, Ethereum is demonstrating impressive strength, notably outperforming Bitcoin in recent trading sessions. This market uptick comes as major players in the crypto space make significant strategic moves, signaling continued growth and maturation in the industry. Bitcoin is currently trading around $116,472.19, while Ethereum has climbed to $4,622.66, showcasing a strong performance. Other notable cryptocurrencies like Solana and XRP are also seeing positive movement, trading at $240.59 and $3.07 respectively, though Dogecoin and Shiba Inu are experiencing more modest gains. This broader market rally is occurring despite significant liquidation events, with CoinGlass data indicating over 116,000 traders liquidated for approximately $329.54 million in the past 24 hours, underscoring the volatile nature of these markets. Among the notable developments, the cryptocurrency exchange Gemini, founded by the Winklevoss twins, is making headlines with its plan to upsize its initial public offering, IPO, to raise $425 million, targeting an impressive $3 billion valuation. This move signals strong investor confidence in the exchange's future prospects. Meanwhile, discussions around Bitcoin's potential continue, with some analysts suggesting it may be outgained by silver-backed crypto in 2025, a contrarian view from longtime Bitcoin bull Max Keiser. Furthermore, Tether is set to launch a U.S.-regulated stablecoin, USAT, appointing former White House executive Bo Hins as its CEO, highlighting a push for greater regulatory compliance and stability in the stablecoin market. Trader sentiment remains high, with analysis pointing to Bitcoin being pushed towards $116,000, though sellers are defending this zone. Stronger buyer momentum will be needed to break through this resistance. Analysts also anticipate a potential weekend surge for altcoins, with predictions of a last big rally of the cycle for Dogecoin, which has already seen a 20% increase in the past week. Mega Matrix's significant $2 billion move into stablecoin treasury management also indicates substantial institutional interest in stable assets within the crypto ecosystem. But the excitement doesn't stop at market rallies and IPOs. Get ready to explore the sophisticated world of crypto options and how Bitcoin ETFs are revolutionizing trading strategies. Crypto options explode. Bitcoin ETFs unleash new trading frontier. The cryptocurrency derivatives market is experiencing a seismic shift, with crypto options rapidly emerging as the next major frontier for traders. This surge in popularity and accessibility is largely thanks to the groundbreaking introduction and subsequent success of U.S. spot Bitcoin exchange-traded funds, ETFs. The integration of Bitcoin ETFs into traditional financial markets has not only broadened the appeal of crypto derivatives, but has also amplified the inherent volatility of digital assets, creating a landscape ripe with opportunity for strategic investors. This evolution marks a significant maturation of the crypto ecosystem, moving beyond simple spot trading and futures into more complex and versatile derivatives. As liquidity deepens and regulatory clarity improves, crypto options are equipping traders with advanced tools for risk management, speculation, and income generation, fundamentally altering how participants engage with the volatile digital asset space. The recent approval and launch of options on U.S. spot Bitcoin ETFs, such as BlackRock's iShares Bitcoin Trust, late in 2024, was a watershed moment. These new products immediately saw substantial trading volumes, reflecting a strong institutional appetite for regulated Bitcoin exposure via familiar financial instruments. This development is reshaping market dynamics by injecting significant liquidity and mainstream credibility into the crypto options. Historically, crypto options trading, while growing, faced barriers related to accessibility and institutional comfort. Direct ownership of crypto assets often involved complex operational, technical, and security challenges for traditional finance players. Bitcoin ETFs have elegantly bypassed these hurdles, allowing investors to gain Bitcoin exposure and engage with options through established broker-dealers and regulated frameworks. This facilitates directional leverage, trading, and settlement in US dollars, offering advantages in compliance, operational efficiency, and familiar reporting. While Deribit remains a dominant force in Bitcoin derivatives, other major exchanges like Binance and OKX are also expanding their options offerings. The growth has been exponential. While crypto options have existed since 2015-2016, the past year has seen trading volumes nearly double, with altcoin options experiencing a staggering 150,000% growth in 2024. The U.S. Securities and Exchange Commission's (SEC) approval of spot Bitcoin ETFs earlier in 2024 paved the way for their options, an event eagerly anticipated by the market. Major asset managers like BlackRock, Fidelity, and Grayscale have been instrumental in pushing these regulated products, recognizing client demand. The initial market reaction has been overwhelmingly positive, with significant capital inflows into ETFs and their associated options. However, this integration presents a double-edged sword. While beneficial for adoption, Bitcoin ETFs could reallocate liquidity away from traditional crypto exchanges. The nascency of these products and ongoing price discovery contribute to high volatility, which, paradoxically, fuels options trading. The ability to trade options on the Chicago Mercantile Exchange, CME, Group further bridges traditional finance and crypto, attracting a broader spectrum of sophisticated participants. Exchanges with robust derivatives platforms like Deribit, Binance, and OKX are poised to benefit from increased volumes and liquidity. Traditional financial institutions and brokerages offering access to these options are also clear winners, as are companies developing trading algorithms and risk management tools. Conversely, spot exchanges without strong derivatives offerings might lose liquidity. Smaller options venues may struggle against the deep liquidity of the CME and major ETF options. Retail traders lacking a deep understanding of options strategies or risk management could face significant losses. The evolution of crypto options, propelled by Bitcoin ETFs, signifies a critical milestone in the digital asset industry's maturation, moving towards institutionalization and integration with mainstream finance. This trend will likely attract further regulatory scrutiny from bodies like the SEC and CFTC, potentially leading to enhanced investor protection measures and clearer rules. The trajectory points towards continued innovation, deeper integration, and a future with options on a wider array of cryptocurrencies, potentially blurring lines between traditional and decentralized finance. And that's not all the action in crypto. We've got a heartwarming story coming up about how quick thinking saved someone from a devastating Bitcoin scam. Elderly man saved from Bitcoin scam by quick thinking bystander. In a heartening display of community vigilance, a potentially devastating Bitcoin scam was thwarted thanks to the quick actions of a stranger at a local convenience store. An elderly man, aged 76, was on the verge of losing a staggering $16,000 after being targeted by fraudsters attempting to exploit cryptocurrency transactions. This incident occurred at a common sense store, where the elderly gentleman was overheard on the phone, attempting to deposit a substantial sum of money into a Bitcoin machine. A sharp-eyed 35-year-old woman, present at the store, recognized the situation as a potential scam. She immediately alerted the authorities. When police arrived, they were able to intervene, explaining to the man that he was being targeted by scammers. The police then accompanied the man back to his bank to ensure the funds were redeposited, and he was not defrauded. While the police report did not detail the specific nature of the scam, these types of incidents often involve impersonation scams where fraudsters convince victims that they owe money to the government, a utility company, or a family member, and demand payment in cryptocurrency. The urgency and anonymity of Bitcoin transactions make them a prime target for scammers seeking to quickly abscond with stolen funds. This event serves as a critical reminder of the ongoing threats posed by cryptocurrency scams and the importance of public awareness and intervention. Fortunately, due to the prompt action of the bystander and the swift response of law enforcement, the 76-year-old man was saved from significant financial loss. The incident highlights how ordinary citizens can play a crucial role in protecting vulnerable individuals from sophisticated fraud schemes. That's all the news for today, but we've got a full recap and a big call to action coming up. Stay tuned for the full wrap-up and how you can be part of the Bitcoin Bulletin community. And that's a wrap on today's Bitcoin Bulletin. We saw a massive debate brewing over Bitcoin versus stablecoins for payroll. The crypto markets are heating up with Ethereum outperforming and Gemini planning a huge IPO. Crypto options are exploding thanks to Bitcoin ETFs, and a vigilant bystander saved an elderly man from a devastating Bitcoin scam. Don't miss out on future updates. Smash that like button, subscribe to the channel for daily crypto news, hit the notification bell so you're always in the loop, leave a comment below with your thoughts on today's stories, and follow us on all social media platforms to stay connected.